Good day. In this video, I would like to quickly go over tax documents. When we send out your tax return or when you see um, your tax return will include a couple of things, detailed summaries, the tax computation, and then summary of tax payable. So in this video, I'm just going to quickly go over a review of tax documents and then what you should do when you receive what you should do and look out for when you receive your tax document. Um, all right, so the tax return will include detailed summaries, the tax calculation, which is usually known as the SA302, the summary of tax payable, and then for our clients, we include where there is a liability, we include information on how to make payment. All right, so I'm just going to bring um, tax computation to tax document to the screen. So when we send you, we'll usually send you tax documents via email for those that have an email. If you don't have an email or by post, we'll send it by post, but usually by majority go via email. So we'll send you the full tax return, which is a long document, which is about, it could be up to 18 or 22 pages. The tax document is usually shorter, but included within the full tax return as well. So when you're looking at the tax document, um, this video is just a quick guide on what to look out for. All right, so at the top, you should have your name or your initial and your last name. And then top right, you should have your tax number there. So make sure that you check your tax number and matches what we have on here. So here we have the detailed summaries. The detailed summary, you will have an itemization of all your income from all sources. Okay, so if you have one income, this will just be the one income. If you have 7 income streams, it would be all the incomes. So on this example, we have income from income received from interest. So this is interest from UK banks or interest on investment income, which will be itemized on here. So in this example, we have total interest income of 1,750. We have dividend income. So dividends, we have a total of 1,500. If there are multiple, if there are dividends from several sources, then that will be itemized, as well as interest from several banks or sources. Those will be itemized as well. Right, so next we have employment income. Where there is more than one employment income, this will be itemized. So if you have more than one source under each category here, it will be itemized. So based on this example, we have total employment income of 20K, tax paid 2005. We have income from self-employment, so income received plus less expenses, giving a taxable profit of £14,000. Then we also have state pension, which is £9,000. We also have other pension, 2005 before tax, and then £500 tax taken. Then we also have income from property. Now on income from property, this section which I'm highlighting here, this will be a total of all property. So if there's more than one, then this would be the total for all. Okay, and then just below there, you will have an itemization for each property showing the rental income received and all the expenses, right? And then where you have mortgage on residential properties, you can see that has been called out separately. Okay, that's not included in the total profit or loss there because as an individual, mortgage interests are not allowed. Um, but if you have a commercial property, then it is allowed. All right, so that's the detailed tax summaries. The detailed summaries. Again, the detailed summaries is just an itemization of all your income from all sources. So you want to check that all the income we have itemized match your records or match what you think, what you believe is the right information. All right, so the next section is going to be the tax calculation. This is where we assess the tax you've paid versus what you need to pay, or where you have overpaid, what you need to pay, what you need to receive in terms of repayment. So the top section, again, it provides a summary of all the income. Okay, payment income from employment, profit from self-employment, profit from property or loss, right? So if you made the losses, those will be itemized here as well, or it will show as a relief, dividends, pension, state pension. Um, so the losses, if you offset a loss, that will come under a relief of some sort, but we're not covering that here. This is just a simple self-assessment tax return. All right, so total income received is 67,000, just under £68,000, and then we take away your personal allowance. This is the amount of tax of income every individual can receive tax-free. And then the amount of income you're taxed on is 55. So this person is going to be taxed on a total of £55,000. And then below, this is how the tax has been worked out, all right? So the 20%, the amount of income that is taxed at 20%, the amount of income that is taxed at 40% when it comes to savings, the amount that is taxed at zero rate, the amount that is taxed at the higher rate. When it comes to dividends, the amount that is taxed at 8.75%, the tax-free amount, and then the amount that is taxed at the higher rate. All right, so overall, the amount of tax that is paid calculated or tax payable, tax calculated, let's say calculated is £14,000. This individual has property. Now you get a relief for property. Remember when I talked about the property, the mortgage cost was not included. So on the tax return, what you get is what you get is a 20% relief. Okay, and then that reduces the tax to just under £13,000. Now, because this individual is self-employed, you have to pay class 4 national insurance. Okay. Now, because this individual is employed, has tax deducted from pension, we this is the amount of tax that was deducted. Okay. And then that is deducted from the tax payable, and now the tax due to be paid is just under £10,000. So overall, for this tax year, this individual's tax liability is £13,000, but through employment pension tax deducted from source, £3,000 has been deducted from source from all employments. Okay, so if you go back to the detailed summaries, you can see under employment income, 2005 was deducted already, and under the pension, 500 tax was already deducted. Okay, so we that is accounted for in the tax computation here. So that has already been deducted and paid. So what the balancing payment now, or the balancing amount now, is £9,973 and 30 pence that needs to be paid. That is the tax calculation. Okay. Now the amount that needs to be paid can be different to the tax liability. So bear in mind, this is the tax liability, which may not be the amount that you need to pay. Okay, so just below you can see payments due. So where your tax liability is greater than £1,000, you have to pay your tax liability in advance. I have a separate guidance on that, and the link for that is available, and I will share that if you need. I will share that so you know where to get that from. So in terms of payment, let's go on the summary page, summary of tax payable, which is the next page. Let's remember we're going through, we've been through the detailed summaries, we've been through the tax calculation, the SA302, and then now we are on the summary of tax payable. All right, so let's go into summary of tax. This is a summary of tax payable. All right, so the amount of tax and NI due is £9,973 and 30 pence. Now you come to the section on payment on account. So in addition to the tax liability for 2024-25 tax year, you have to pay the liability for the 2025-26 tax year in advance, and that is what the payment on account is. So your liability, the liability here is divided into two, which is what you have here. So 50% of 9973, half of that is payable 31st of January. The other half is payable 31st of January. So there are three lots of payments you have to make, but paid twice. So you're paying 9973, you're paying 4986, and then you're paying 4986. All right, so 9973. Now this is what you have here. If you have made the payment on account in the previous year, that comes off what you need to pay. So as an example now, this individual has made the payment on account in the previous year. So that comes here and reduces the 9973 to 6801. All right. So what they need to pay is 6801 plus 4986, which is 11788, which is your first payment on account, which is due not before the 31st of January. And then the second payment on account, which is 4986, which is due for payments on or before the 1st July 2026. All right, so you can see that the tax liability, which is 12973, is different to what is due, 9973, and what is due is different to what you pay. All right, so there is usually a difference between the tax liability, what is due, and what you pay. So again, there is a separate video on guidance on payment and accounts, which I will share the link to. So this is just an explanation of the tax documents. There's one more section. So if you are a client, what we usually do is we summarize what you need to pay. So we will send, if you have a liability, we will send you a document like this that provides a breakdown of what you need to pay. So that's what you need to pay by 30. That is the amount that needs to be paid before 31st of January, and that is the amount that needs to be paid before 31st of July. So three lots of payments paid twice each year, January and July each year. And then below we will have the account details here. You would need your tax reference number with a K followed by a K at the end of it. And then if you're not sure, always you can go to the gov.uk website to confirm the payment details. You can also pay by check, but the easiest and faster way is to do a bank transfer and then log into your online accounts to confirm that payment has indeed been received. So that's it on this video. I hope this is helpful. If you need any help with understanding your tax documents better, feel free to give us a call or book an appointment to discuss it further.